talking about OMCs, you have Brent crude prices which have actually dropped 17% from its 2025 highs. Now, let's understand first from Somit if India will benefit from the price drop, and if so, what would the impact of low crude prices be on various industries? But first, what are the consequences on India? Somit, over to you.
Well, yes, Brent crude prices have come off sharply. In fact, yesterday's low point, if you see, it was at around $68.3 per barrel, which is the lowest level that we have seen since December 2021. In fact, for second consecutive month, we have seen a drop coming in when it comes to Brent crude. In February, it was down around 4.7%, and in March so far, it has declined a little bit more than 5% in trade. And from 2025 high, Brent crude is down nearly 17%. So what are the reasons that have led to this fall in, the sharp fall in crude oil prices? Firstly, it's the rising dollar index that led to the correction in the crude oil prices. Apart from that is the heightened global uncertainty on the back of Trump tariff, which has led to this fall in crude oil prices. And lastly, which is the most important reason, is the fact that the OPEC Plus is looking to increase their production output from April 2025 amid the slowing demand for crude that we are seeing is also led to this fall in crude oil prices. Now, why is it important for India? Yes, for India, it is most important because oil is one of the key energy source for the country, and 85% of the oil consumption needs are met via export. However, the intensity of oil's dependence in India's economy has come down, because if you look at when we had hit the $1 trillion economy, India used to import around 900 million barrels of crude, which was nearly 8% of the GDP. And when we are now at around $3.5 trillion of economy, we are importing around 1.7 billion barrels of crude, which is just 4% of the GDP. Now, how does it benefit the India as a country? Because if you look at the inflation number, fuel's weightage, direct weightage in CPI is around 4.4%, and direct weightage in WPI is around 8%, and every 10% drop in crude oil prices increases the CPI or reduces the CPI and WPI by around 40 to 80 basis points. The second benefit comes in on the current account deficit. Oil accounts for nearly 61% of the total commodity imports and 26.5% of the total imports of the country, and every 10% drop in crude oil prices lowers or narrows the current account deficit by nearly 30 basis points. And generally, growth is something that we see when there is a drop in crude oil prices because of lower inflation, looser financial conditions, and robust business sentiment that also leads to higher growth whenever crude oil prices have come off sharply from their highs.
Right. Thanks, Amit, for that. But what about the effect of, the fall in crude prices on various industries? Is it largely positive, or is there a negative impact as well?
Well, it's kind of mixed, but positives are much more when compared to negative. On the first and the foremost sector that stands to get impacted is the oil marketing companies. Now, largely it's a neutral impact, but the street considers it as a positive impact given the fact that lower oil prices leads to higher marketing margin. But why a neutral impact? Because whenever we have seen a sharp drop coming in the crude oil prices, there are huge inventory losses reported by oil marketing companies in that quarter, and that can be similar. That is something that we can expect in the fourth quarter as well. But generally, lower crude oil prices leads to higher marketing margin, and a 0.5 rupees per litre increase in the marketing margin increases IOCL, BPCL and HPCL's EBITDA by anywhere between 8 to 11%. So that is a positive impact coming in. But on the negative side, there could be inventory losses. Apart from that, there are various sectors that stand to benefit. Firstly, it's the paint companies or paint sector that benefits, because nearly 40% of the raw material cost is oil and oil derivatives, and a lower crude oil prices could lead to lower raw material costs for them. However, it will come with a lag impact. Similarly, for aviation companies, major raw material is fuel, which is around 40%. For lubricant manufacturers, 50% of the raw material cost is crude derivative, and both these sectors will benefit with lower crude oil prices because their margins could expand going forward. Apart from that is the tire companies, for which if you look at various chemicals like synthetic rubber, carbon black and other chemicals, these form nearly 50% or 40% of the raw material basket, and a lower crude oil prices could lead to higher margins for the tire companies as well. Apart from that is the cement companies. Nearly 40 to 50% of their cost is either directly or indirectly linked to crude, and lower crude oil prices will benefit them as well. Then there are specialty chemical, in fact a host of specialty chemical, it will be positive because crude or crude related derivatives are one of the key raw materials for them. On the negative side, if you look at, is the oil explorers like ONGC, Oil India, Vedanta and HOEC that get negatively impacted because crude is one of their key selling key product, and a lower crude oil prices means lower realization. But ONGC and Oil India get impacted the most because they are the largest oil explorers in India, and generally a $5 per barrel drop in crude oil prices lowers ONGC and Oil India's EPS by anywhere between 7 to 12%. But do remember, this is the most important point here, that for any benefit to realize, even for the country or for this company's, crude oil prices need to sustain at these levels. These kind of short-term fluctuations actually don't impact the country or the companies. There won't be any much benefit or losing out that we can see if crude oil prices do not sustain at the current levels that we are seeing currently, that is below $70 per barrel.
Right. Thanks for getting us the details, Somit. So that's the kind of impact that various sectors could take. Asta, Somit took us through, the kind of impact that Brent crude drop could have, because we're already at a 3-year low below that $70 per barrel mark. From the sectors and the companies that he mentioned, does that tell you that you should be buying any or selling any of the stocks? What would your view be?
So at this point of time, we are liking OMCs, that is oil marketing company, and among that, HPCL is our preferable choice. Now, if I talk about discounter, first of all, would like to give the target. It can be somewhere at around 370 to 380. Now, why HPCL? First of all, we have seen their quarterly performance was good. Now, this was better as compared to IOCL and BPCL. Secondly, we are seeing that now there is a chance of demerger and the listing of their lubricant business. So that can be acted in a positive manner for the company. Thirdly, they are about to start one of the refinery in the Rajasthan, which I think which will be for the calendar year 25. So I think all these will work in a favor of the company along with the strong financial performance. So among OMC counters, I'm liking HPCL, giving a buy on this counter with a price target of 370 to 380. Talking about paints and the tire sector. So still we want to see how these counters will be performing, because financial performance was not very satisfactory. So we would really like to see their Q4 of FY25 numbers and then want to make any sort of re-rating in the paint counters as well as tire industries. Although among tire stocks, Apollo Tire looks quite decent to us. And in the chemical space, we are positive, keeping our buy view on Navin Fluorine.
Got it. Thank you, Asta. So a positive on something like an Apollo Tire, Navin Fluorine, HPCL.